The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and we got a delay on those 50% tariffs on the EU, July 9th. Should come into July 4th. But nonetheless, you got about 6 weeks out there. The market reacts. Markets closed yesterday, but to back things up, you see the acceleration on Sunday night on the open. That news was already aware. And yeah, we're trading up right now 1.4% or 80 points to the upside. NASDAQ 100, how about 1.5%? Up 322 points, 21,296. The Dow up 1.25%, up 517 points for the Dow, 42,191. And the Russell up by 33 or 1.6%, 2,076 right now. Crude under 61 yet again, just even in the last few minutes. See that volatility on crude? 60.89. Not bad. Coming off Memorial Day weekend in the summer. And yeah, we got some action. Yields, let's jump to yields first. Gold down $70. We'll jump back to gold in a moment. And we got some good stuff to talk about today, man. So you got NVIDIA with their earnings tomorrow. That's going to get a lot of talk, rightfully so, this week. But we have the 10-year right now. You see the initial reaction on the Sunday futures, and then what have we had happen? You've had higher price, lower yield. Let's see, when I was doing the newsletter this morning, we're at about 4.47. Let's just see where we are right now. 4.47, the yield on the 10-year right now. As you have lower yield, and as we have your lower yield, we do have dollar strength, though. Okay? Dollar up about 278 ticks. We've backed off a bit. So we have dollar strength right now. That is weighing on the gold contract. Down by almost, well, $70 now. Was down almost $80 at one point. Gold trading at $32.94. Down $71 right now. And check out the dollar yen, man. Check out this move, because this is a lot of what's going on right now. How about that move for you? 2 full points, right? And when you trade higher, that's weakness, okay? So that's yen weakness. When you trade from 142 to 144, what this number means when you say put the 1 in front of the USD, when you got currency pairs, folks, right? The way to do it, you just put 1 in front, okay? So that means 1 US dollar equals how many yen? Well, 1 US dollar was only going to buy you 142 yen last night. But guess what? The dollar strengthened. Now it's going to buy you 144 yen, right? So when this number goes up, that means dollar strengthening and the yen is weakening. Well, you have the yen weakening right now. And the reason why, okay, is that the market was worried here. And look at this move, right? Look at this rip-roaring move. And even you go back a little bit further since the tariffs were announced. Got to go back even further than that, yeah. Yeah, there it is. So you trade from 150 back down to 142. That's lower price. That's higher yield. Excuse me. That's lower price. That's yen strengthening, correlating to their higher yields. Okay, we're going to walk through this one because this one's going to have an impact on the dollar, and this one is potentially going to have an impact in the gold market, and of course, dollar, gold, yields across the board, right? So what's been happening is yields have been spiking. I'm going to pull up this chart. Well, let's just jump to the article I pulled the chart from. No, that's not it. Hold on one second. Is this the one with the chart? It sure is. Perfect. Bond yields have surged since the U.S. tariff order, okay? But look where they've surged the most. The 40-year, long duration Japanese yields, okay? 40-year and the 30-year are the ones in the 40-year in the black here, 30-year in the red, we'll call it, and then you have the 10-year and the 2-year. When you go to the 30-year, you have a huge surge because nobody wants to buy their longer-term bonds. Okay? Now, some of the statistics here. The finance ministry may be prepared to adjust debt issuance following a rout in the market. Well, you better believe there was a rout, okay? They had a sale of 20-year notes last week that got the weakest demand in more than a decade. That's the 20-year, right? They have a 40-year auction tomorrow. So the market was totally freaked out. You had the finance ministry sent out a questionnaire to market participants asking for their views on issuance. And what they say here is that the timing, number one, right before the 40-year auction, okay, and the wide group of people contacted, right, they sent it out to everybody. They made it known. It was a very purposeful decision. What they're saying is they're saying, hey, how do you feel about all this debt we're issuing, right? Should we scale it back? The market's going to say, yeah, you should scale it back because the demand is very light. So what are they going to do? They're going to scale back that debt, right? And by scaling back the debt, they're going to decrease supply. I mean, it's just modern economics, folks. It drives everything eventually. And as they decrease supply of that debt, right, what is that going to do? Well, that's going to allow the price of that debt to go up because where demand and supply equal, if there's less supply, right, demand will have more of an impact to rise prices. What will that do? When you talk about debt, that'll bring down yields, okay? Bring down yields, and what will that do to the currency? That will weaken the dollar-yen currency. It's a decisive move, and we are right at a critical area. And if you start getting a big-time acceleration here to dollar strength, yen weakness, right? That's the reason why we're seeing a bounce in the dollar right now. And boy, that's a pretty muted bounce, but we're at some critical levels. You see it on the dollar, right? This 99 level in the dollar, right since April 10th. Now look at the U.S. dollar yen. I spent a lot of time looking at this morning. Sent out Market Insights, sent out the gold report. Same exact thing for the dollar yen, right? Critical area. We're bouncing from that area since about April 11th. And so pay attention to the dollar yen, okay? Because that's driving a lot of the action right now. And yeah, we got the euro, but especially if you're in that gold, because what's happening this morning is, what are we seeing? Well, we're seeing a change in tone. Okay, they got a problem issuing longer-term debt in Japan, especially since the tariffs have been announced. They're going to change focus. They're going to decrease supply. That's going to cause their rates to drop, which is going to weaken their currency, which is going to strengthen the dollar, which is going to weigh on gold. How about that for just a few levels deep? But that's where... how many levels deep do you go in the game, right? That's what I'm walking through this morning. And, you wake up. I said in the gold report this morning, folks, if you want to check out the gold report, new issue out this morning. I said, it seems all too often right now, not even surprising that you wake up and gold's down $80. Now you're down $70 right now. We're bouncing. All right. But we got a higher consolidation area right now. You peaked out at 3,500. But I think gold has a little bit of work to do consolidating, because not even surprising in terms of you wake up, gold's down $70. And keep in mind, folks, we got dollar strength, but the dollar's trading at 99.24. 99.24, and gold's down $70. This is a big move, man. All right, folks, stay tuned. We're coming back. We'll take a look in the video. We got a lot to talk about. Tuesday trading. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out, like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. S&P's up about 1.4%, trading at 58.98. We get the NASDAQ 100 up by 1.6%. You jump around to some of the equities over there. We got Apple shares trading up about $3. You see the action on Apple. That acceleration Friday, my goodness, right? You jump over right now on Microsoft shares. You're trading up about $5 to $6. Amazon shares on the EU News up about $4 as well in the pre-market. Now we jump over to NVIDIA shares, trading up a few dollars at 135. We'll call it from 131.29. So you're trading at 135 this morning. And you take a look at this from the lows. We take a look at a weekly. And yeah, you see that volume on May 12th? And a lot of equities lined up like this. Last week, coming into Memorial, we get low volume. Okay, the high of last week, 137.40. We're going to open at about 135 right now. Now, NVIDIA priced in about a $10 move this week on their numbers. So about a 7% move on the numbers for NVIDIA coming into their earnings tomorrow after the bell. All right, and speaking of Bloomberg this morning, how about $7 trillion in money markets, man? My goodness. Now, what's remarkable here is, okay, you got to remember that you came into COVID with trillions, which is just a remark. Now, this has been on the rise in dramatic fashion, okay? But yeah, look at that number, man. $7 trillion in money markets, okay? Whew. And yeah, we're going to get a bellwether tomorrow for NVIDIA, whether you're talking about AI. But that is quite a number, right? Institutional positioning in the U.S. tech sector undemanding, with hedge funds and mutual funds still substantially underweight. I find that hard to believe. Institutional length in equities far from exuberance levels. You know, a lot of these equities priced accordingly from margins. And boy, if we ever get a margin compression story, okay, there's a lot of risk that's laying out there. With this economy, with where we are, nonetheless, you chug along right now in NVIDIA, up by $3 on the open. You jump over the volatility index on a daily basis. You're sitting at about 20 right now on the open. You made it as high as 25 on that pullback on Friday morning, and then you almost get it all back right to where we were on Thursday in this market. Yeah, gold down about $72. You jump over to silver, you know, check out this chart in silver, right? And until you get a breakaway, I'm not going to be touching silver right now. You know, ideally, you'd want to break these highs, come back and maybe test it. You break above with volume, you pull back in lighter volume. Okay, we just haven't had it happen. You know, you look at the volume we had maybe April 21st. That week you did 330,000 contracts in silver. Last week, 251 on that acceleration higher. And what do? You bump up right against the highs of $34, which for the better part of almost a year is where silver's just been consolidating. We jump over to copper, talking some metals. Big week for copper last week, but kind of the same action in terms of you trade up to 489. We're trading at 479, but we're in a range right now, and we're at the upper end of that range in copper. The upper range, 5 to 520, and we made it as high as 490 almost last week, 489 on copper. Struggling to get above that, and again, you look at the volume, right? No volume. And that's the way it was with a lot of equities in the gold report this week. Let's see if I just cherry pick a couple. Yeah, look at this drop off. This is a perfect example, okay? Be careful in this gold report right now, in this gold market, and check out the gold report if you haven't, folks. New issue already out this morning, okay? Look at the volume in Harmony. Harmony's a great stock, folks. One of the strongest equities in the gold report. Now, look at this. You're trading down $1.50 on the open. Man, you're going to open down 9%? You kidding me? Look at this move. Okay. Look at this volume in Harmony. Last week in Harmony, you did 17.6 million shares on a weekly basis. That was a full trading week, 5 days. We've had many weeks this year that we've had shortened trading weeks, right? Whether it's President's Day, Martin Luther King Day, can't name a couple others. Yeah, a couple others, right? The front of our year is always loaded with 3-day weekends. That's the lowest volume that we've had all year, folks, on Harmony. And look at the price action you got. Okay, that is quite a bar on a weekly basis. Doesn't, match what was happening on the exacerbated April lows. But outside of that, it's one of the strongest bars we've had all year. But guess what? You did 17.6 million shares on a weekly basis. That's the smallest weekly volume all year for that acceleration. And what do you do this morning? You give up 9%. Pay attention to these volume numbers. All right. Let's see. Hecla's silver. Oh, look at this equity, right? Whew. How are you getting into this thing? My goodness. Look at the drop off in that volume. That's a tough looking chart for Hecla. Chopping around near $5. Even if you're bullish, $6 is the ceiling right now for Hecla. Let's see. One of the strongest equities out there. New Gold, right? Look at this thing. You charge to, I think that's just recent highs. This thing was way higher at some point. Yeah, it was way back here. But outside of, you're talking about highs that we haven't seen in, a decade or something like that for New Gold. But again, look at some of this volume on some of these, okay? On a daily basis, you're trading higher. But look at the volume, even on the strongest equity in the gold report, right? That's the lowest volume you've had in 5 weeks on New Gold. Let's check out some others. I Am Gold, not bad. I'm cherry picking some of the strongest equities in the report right now, folks. Look at these equities, right? You can still make a real case for being positioned in these gold equities. But I would just pick a stop on this consolidation, and you see the likes of Harmony. Let's see, AEM. Yeah, this is another one of the strongest ones. And again, look at the volume. Look at the volume for the price action. Not bad. And then you jump to, let's see, copper stocks, right? FCX. Look at that volume. It's drying up, man. Yeah, Southern Copper. If you're looking to get in Southern Copper, wait for a breakout. Wait for a breakout of that channel line. Trade at 92.34. That's where we're going to open. But lower lows, lower highs in Southern Copper. And that's when you have copper itself pushing the upper boundary of $5 right now. All right, and it was a strong weekend at the box office, as you actually had Lilo and Stitch, like the follow-up, right? Let's see. Yeah, Lilo and Stitch was number one, and I think we had Mission Impossible as number two. I'll get the numbers after the break. Yeah, $326 million Memorial Day weekend. Lilo and Stitch, $183 million. Mission Impossible, $77 million. Still not bad. Tom Cruise doing it at, what is he? Is he still like in his 60s? I think he is. All right, we're coming back for the open, folks. We'll talk a little bit movies. We'll take a look at Disney. We'll take a look at Salesforce. They got a big acquisition going on. They got their numbers as well this week. We'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets open. You got equities right now. S&P's up by 1.2%. A little bit of selling coming into the opening bell, but 1.2% to kick off a shortened trading week. NASDAQ 100 up by almost 300 points, or 1.4% right now. Dow up almost 400 points, or 1 percentage point, 42,078. And the Russell up by 1.4% right now. You check out NVIDIA shares, as I mentioned. NVIDIA, their earnings after the bell tomorrow, up by 2.5% right now. Not bad. And you jump over, about a $10.50 move expected throughout the week for NVIDIA shares right now. You're trading at 135, so $10 in either direction priced in for their numbers after the bell tomorrow about. And as I mentioned, big weekend at the box office. Yeah, you're talking about a record Memorial Day. And bring over the headline here. $326 million Memorial Day weekend. Lilo and Stitch, $183 million. How about that? More than lapping Mission Impossible 8 from Mr. Tom Cruise. And yeah, Tom Cruise is 62. Not bad. Born July of 1962, and he's 62 years old. And what's he turning? Yeah, he's turning 63 on July 3rd. Mr. Tom Cruise. Not bad, man. Rocking it. Haven't seen Mission Impossible 8. Haven't kept up with the Mission Impossibles, but quite a box office. So Disney, that Lilo and Stitch, and they talk about here, that brand, yeah, you talk about pushing out merchandise, man. 2.5 billion retail sales last year alone for that brand. You're talking about it, and the numbers are going to keep going. Yeah. Domestic 2025 box office so far, January 1st through May 26th. How about $3.3 billion, up 22% over the same period a year ago? And, you know, maybe sometime this week I'll pull it up, folks. So we pull up Disney shares. I mean, geez, that's a tough one, right? They're not even keeping up with the market right now. They're up by half a percentage point. Meanwhile, they crush it with $183 million for Lilo Stitch at the box office, but nonetheless, baked into their price. Disney only up by 0.5% right now. Paramount up 0.5% as well, and their Mission Impossible. In terms of Paramount, producing Mission Impossible up by 0.5%. We jump over the streamers. Netflix. How about $1,200 for Netflix? Look at this chart, man. This chart. Look at this weekly. Is there even a pullback? Now, yeah, there was a pullback this year, okay, with the tariffs from 1,060 down to 800. But you can barely see it on this chart. The trajectory is so high. You go back 5 years for a weekly, and boy, I mean, we got to be approaching. Yeah, I was going to say, you got to be over the 1 to 1.618. Maybe we're on our way to 1,500 to 1,550 because this thing's not slowing down. As you've been trading higher for Netflix for the better part of 3 years. And who would have said that it was a 10-bagger coming up, right? And if you're trading up to 1,600, you're 1,200 right now. But ads of the future. It's absolutely remarkable, right? Maybe that was the plan all along by Reed Hastings. It'd be brilliant if it was. He'd say that it was never. But you got to imagine, you know, the low-hanging fruit of ads was always out there. And man, it's been a big winner. I see it myself all the time. I watch Netflix all the time in the evening. Ads everywhere. I actually find myself saying, maybe I should sign up for the premium because they're such a bother now. And we jump over to Warner Brothers Discovery. You talk about a different chart, right? Now remember, that's the Bill Huang saga, okay? That's an irrational high. Oh boy, look at this equity, man. Up by 3% today. We'll see if they bring some volume in. Looks like we got some decent volume already. Jump back to that gold contract. We had huge volume on gold earlier. We're going to have a big volume. Yeah, look at this on the daily. We've already done 225,000 contracts. Gold's off about $65. We jump back to yields right now. Holding at about 110.10 right now. Yeah, 4.47 to 4.48%, the yield on the 10-year. And the dollar at 99.27. Watch that dollar yen as well, folks. Because, boy, that's having a move. All right, Informatica. Not a bad day for Informatica. $8 billion. How about that one? Salesforce. They're going to acquire a data management company. Informatica, $8 billion. Not bad, man. And yeah, Informatica shares higher on that one, of course. Deal is going to be funded a combination of cash and debt. Yeah, and they love doing deals, man. All right. Mark Benoit. Slack, $28 billion. Tableau, $16 billion. MuleSoft, $7 billion. Add Informatica, $8 billion. That 24, 40, 50. That's like $58 billion in acquisitions for Salesforce in the last 6 years, okay? And they're a company that's valued at $261 billion. Imagine that, right? That's a big number when you think about it. Their market cap versus what they're purchasing. This has been a strong company. But look at the volatility compared to some of the other tech companies, right? Salesforce right now, back at 2023 prices. Compare that to any tech company out there. Especially 2023. Just cherry picking. The biggest winners out there. Apple shares up by 1.4% so far this morning. All right, we jump around to what else we got going on. How about Tesla? In the press yet again, up by 3.3% this morning. Now, all the headlines are negative, but guess what? Maybe there's a lot of baked in already. You know, people are aware that the brand's got a problem. That's baked into the price. But these are big numbers, man. Trying to wrap my brain around it. I know Tesla's got the ultimate meme momentum of supporters. They only sold 7,200 cars in April, down almost 49% year over year. What always amazes me about public companies, right, and I'm sure we all see it, is the level of consistency and growth. It is a machine that churns. And we see it when they come out with earnings, right? If you don't deliver, man, you get punished. And so they have this institution of expected growth, analyzed growth. They're able to forecast that growth with remarkable accuracy, and it just grows. I mean, something like, you know, the tech companies out there, the way they're able to grow. When you're a company like Tesla and you're valued at multiples, you should be growing. Now, they have their story and going years forward, and that may play out. But it is interesting, some of these companies, like, you know, the biggest tech companies, let's just take Microsoft Azure, right? They have to crush it every single quarter. They have to be growing those sales on a percentage basis that meets forecasts. And as a small business owner, usually in companies, folks, there's a lot of volatility, okay? You got contracts, you got customer behavior, you have economic concerns, you have whatever it is, right? That level of consistent growth is remarkable. And then you see the problems going on at Tesla. And they happen in any company, okay? But man, when you're factoring in a level of growth that's remarkable, and then you're selling 50% less cars year over year, whew, that story is like, when's it coming due? And yeah, this one. Last week, BYD, they're not just outselling Tesla in China. How about outselling Tesla in Europe out last week? So they got some issues. Nonetheless, Tesla up by 4% today. We're coming back, folks. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P's up by 1.1%. NASDAQ 100 right now up by 1.2%. Markets give it back slightly, but still, you're talking about quite a gain to kick off Tuesday trading and a shortened trading week. We jump over that gold contract. Down about $67 right now at $32.99. We go back to Disney for a moment. Up by 1.1% for Disney shares. And I was trying to get the full slate of movies that are coming out. They got a heck of a slate coming out. And I know they're always tweaking those dates somewhat. But you're talking about a Star Wars movie coming out next year. 2 Star Wars movies. I think we have one towards the end of 2026. One towards the end of 2027. Okay? And when you're talking about, we got an Avengers Doomsday, I think those are going to be 2026, and then another Avengers in 2027. And then you have animated movies. Yeah, you're talking about which one was I looking for? There you go. And a new Toy Story is coming out as well. Toy Story 5. As somebody with a 4-year-old, folks, Buzz, Woody, the pajamas, everything goes with it. And then you add in an Avatar movie in there, and then you got Star Wars. They have quite a selection of movies coming down the line here. Yeah. They got an Avatar at the end of this year, I believe. They got Zootopia coming out, too. You see the way Lilo and Stitch can crush it on a number one. Zootopia will be a big one as well. Take a look at a longer term. Tough part here is 120. You're going to face some resistance, man. You know, look at this. Look at this area. You're talking about trading into 3 years of consolidation for Disney from about 80 to 120. We're approaching the upper boundary there. You back it up on a monthly for Disney, and you're talking about trading at prices. You're trading in 2015. But yeah, you break above this 120 area. You know, 140's next. As Disney gets their house in order. And that new Epic Universe, right? The new park over there in Orlando. Yeah, that's probably going to be a helper, man. Anything he can do to improve that area is just going to bring in more people, and Disney dominates it. Even if, I was talking about this last week, Disney execs, even if they lose a little bit of market share, the market's going to expand when you have $7 billion spent on an amusement park right next to yours in Orlando. Universal wants to build it out so that you can spend a whole week in Universal parks. I feel like and that can happen. I haven't been to Disney as an adult. I went there many times as a kid. I loved it. Still remember it. Still remember those character breakfasts, all that good stuff. But I think a lot of people might try and fit a Disney day in there unless you're making so many trips that you can afford to make a trip to Orlando and not visit Disney. Because I can tell you, folks, I can't wait to visit the Universal parks. Tommy loves Mario, okay? And they have a whole new Super Mario World as part of that Epic Universe. So we're going to go there. But I'm also going to make sure that I take him to Disney. And nonetheless, Disney, if you're getting into this thing, you want to see some action, you want to see it with volume, because this is going to be a critical area. How many highs do we got? We got the high from basically we'll call it the beginning of this year, all the way from the election to the highs of March when you traded lower on the tariffs. You get the high from April of 2024, right at about 120. You get the high from February of 2023, you're at 118.18. You get the high from August of 2022 when you hit a high of 126, but just a little bit of a tail. Realistically, you got up there with volume on August of 2022, but boy, that was short-lived. You gave it up. So everybody in this stock has been saying, man, see if we can power over that 120. All right, we talk about what else we have going on in this market. Yeah, Neil Kashkari favors maintaining Fed rates until more tariff clarity. And they're just going to be on pause a little bit. He was speaking at a Bank of Japan event in Tokyo on Tuesday. They got a lot going on in Japan right now. But nonetheless, Bank of Minneapolis President Neil Kashkari doubled down on his case for caution. And yeah, I would say that plays out right now, folks. No reason to get ahead when uncertainty lies. You see the type of action that you have, right? So imagine, this is what the Fed's dealing with. There's a lot of pressure on them to cut from the president and likewise, right? So there's a lot of pressure on them to cut. Meanwhile, we see how policy can change over a Memorial Day weekend, accelerating the market up by 1.5%. And what if the Fed had jumped ahead of that? What if they had said, oh man, there's a 50% tariff on the EU coming. That's going to really weaken the economy. Maybe we should step in. And then they step in. And then over the weekend, that policy is gone. And that's the difficult part that they're trying to deal with, is how to step in front of so much uncertainty on the policy spectrum. Yeah. All right. Yeah, we jump around to some of those gold companies, and you got Harmony out there. So they're going to buy Mac Copper. That's the deal. So they're paying $1 billion from Mac Copper out there, and that's part of the reason that they're down. But guess what, folks? The volume don't lie, okay? Lowest, if you're in Harmony, you get that acceleration last week, okay? And if you don't get it, if you didn't get it this time and you're still in Harmony, it's okay. But the more experience you have, the more you'll see stuff like this and say, you know what? Yeah, that mattered. You know, when we had, let me take just some of this off for some clarity here, okay? Let's take some of these lines off to show you what's going on here. This is a weekly basis. And you trade from $8 last week. You reached $16, and you did it on less volume that we've done the entire year of trading. That's not how it goes, folks, right? And what happens this morning? You wake up, and you're down 8.4%. Well, you think anybody knew potentially that was not buying that equity on Friday with the anticipation? And you don't even have to know. Just follow the technicals, okay? But the expression someone always knows, there was lacking demand on the volume side. Now, the equity crushed higher, okay? So there were buyers out there. But there weren't buyers with quality volume. And that was on the eve of a long weekend where they're going to talk about an acquisition, right? And the stock wakes up down 8.3%. Yeah. But some of the other biggest stocks out there, New Gold, basically flat this morning. But pay attention to that one as well. You traded to highs last week on the lowest volume you've had over a 5-week period. You had wide price spread. You know, it is nice when you get a candle like that, right? You take out a couple weeks of trading action. You trade up to 434. You almost finish at the highs. But you do it on volume. That's the lowest volume over a 5-week period. Coming into Memorial Day, you know, this market pushed a little higher, but nonetheless, you're holding up pretty well today with the market getting slammed in gold right now. New Gold basically flat. IM Gold positive today, up by 1.6% right now. AEM down only 0.2% right now. First Majestic, there you go, up by 2.1%. And Alamos Gold flat. All right, folks, one more segment. S&P is up by 66. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We've got the S&Ps right now up by 66 points to kick off a shortened trading week, up by 1.1%. As I mentioned, NVIDIA out with their numbers tomorrow. NVIDIA up by about 2% right now, trading at $133.99 for NVIDIA shares. You jump over to Salesforce on their acquisition, up about 0.5% right now. Disney on strong numbers from Lilo and Stitch, $183 million. Not bad. Up 1.1% right now. Paramount with Mission Impossible flat on that number, even with the positive market. $11.98 for Paramount shares. Netflix only trades higher, $1,202 for Netflix shares. We jump around to some of the Magnificent Seven. Apple shares up by 1.2 right now. Amazon up a similar 1.2%. Microsoft up by 1.6%. We check in on Google after a strong week last week, up by 1.7% for Google shares right now. And Tesla catches a bid, up by 4% for Tesla shares. We check on yields. Yeah, 10-year shopping around near about 4.47% right now on that 10-year. And as I mentioned, the dollar, the yen, action in currencies. The dollar right now, 99.33. And the yen. You talk about a move from 142 to 144. We have the yen weakening. That's providing dollar strength, and that is weighing down that gold contract down by $72 right now. Gold equity is holding up relatively well, though. We went through some of them. If you're interested in the gold report, folks, head on over, check out the gold report under the newsletter tab at TFNN. New update out this morning. And we finish it up with crude, 61.06 on the price of that crude contract, down 47 pennies. Let's check in on silver as well. Yeah, a little bit of action, but down about 45 pennies for silver. We jump over to that copper market, down about 5 pennies for copper. Look at that, Kyle. The uranium stocks, CCJ, up another 5%, man. This thing going for the highs of December at 62.55. Strong like bull. Uranium. All right, folks, thanks so much for kicking off your Tuesday right here with me with the Morning Market Kickoff. And we got a treat. We got our man Larry Pesavento. He's filling in for Basil. Coming up next, I'm going to do the 10 o'clock update. And then Larry Pesavento is coming up live, folks. We got a treat. Larry doing double duty. Thanks, Larry. Well, stay tuned. I'm coming.